Hello all, welcome to Your Schemes. I'm Ilakya. I hope you're all doing well. Are you a person who is looking for short-term investment for less than 1 year? Then this video is for you. Today we are going to see 5 short-term investment options with decent returns. We bring to you latest bank news and financial updates. We also talk about LIC policies, post office schemes and mutual funds. So please make sure to subscribe to Your Schemes and hit the bell icon. First on the list is bank fixed deposit. Bank fixed deposits come with various tenures ranging from 7 days to up to 10 years. The duration of the fixed deposits differ across banks. These fixed deposits can be renewed on maturity and the funds can be reinvested. If you want to make a fixed deposit, then I would recommend to go for small finance bank because small finance banks offers higher interest rate compared to the private and public banks. And also, small finance banks are covered under deposit insurance and credit guarantee corporation rules, and each depositor in a bank is insured up to a maximum of 5 lakh for both principal and interest amounts. Liquidity. Some banks may offer deposits that do not allow premature withdrawals. Even if there is a premature withdrawal, there will be a penalty. The penalty rate depends on the bank. As per your need, you may opt for monthly, quarterly, half yearly, yearly, or cumulative interest options. The rate of interest depends on RBI's repo rate. The latest interest rate of State Bank of India ranges between 3% and 5.75% for a tenure between 7 days to 1 year. Whereas HDFC Bank offers fixed deposit interest rate between 3% to 6% for a tenure ranging from 7 days to 1 year. Taxation. The interest that you earn is added to your income and is taxed as per the income slab. If you earn interest above 40,000, then you will be taxed. If you wish to go for fixed deposit, then you can go ahead and watch this video on our channel. I have shared the best banks for 1 year fixed deposit. Next option for the short term investment is debt mutual funds. So there are 4 types of debt mutual funds you can invest for short term. The first one is liquid funds. As the name suggests, it invests in highly liquid money market instruments and debt securities, which are of very short tenure and hence provide high liquidity. For example, they may invest in treasury bills, T-bills, commercial paper, CP, certificates of deposit, collateralized lending and borrowing obligations, which have maturities of up to 91 days to generate optimal returns. It also maintains high safety and high liquidity. If you want to close this liquid mutual fund, then it is processed within 1 working day. Next type of short term mutual fund is ultra short duration fund. These invest in debt and money market instruments with the duration of the portfolio between 3 months to 6 months. Next type is low duration fund. These invest in debt and money market instruments and the duration can be between 6 months to 12 months. Lastly, money market fund. It invests in money market instruments having maturity up to 1 year. Liquidity. In debt mutual fund, the liquidity is high and the units can be redeemed in quick time. Let's look at the taxation. The taxation of debt mutual funds has changed from financial year 2023-2024. According to the amended income tax laws, investment made in specified debt mutual funds on or after April 1st, 2023 would be taxed at income tax slab applicable to your income at the time of redemption. For investments made till March 31st, 2023, the redemptions from such specific mutual funds will be taxed as per the holding period of the mutual fund schemes. If the holding period of the specified debt mutual fund is less than or equal to 3 years, then it will be taxed at the income tax slab applicable to your income. If the holding period exceeds 3 years from the date of investment, then it will be taxed at 20% the indexation benefit. Next option for short-term investment would be recurring deposit. If you want to save regularly for short term, 6 months or 9 months, 12 months, then you can go for recurring deposits. In recurring deposit, you have to invest at regular intervals for a fixed period, and on maturity you will receive the lump sum amount. Most banks offers online FD, so it makes it easy for you to open RD. Let's look at the tenure. The minimum period of deposit is 6 months, while the maximum period of deposit can go up to 10 years. Liquidity. The premature withdrawals depend on the bank. They may allow you to close your account before the maturity on certain conditions. In recurring deposit, the interest rate doesn't change during the tenure. On maturity, you will get a lump sum amount which includes your regular investments and the interest that you earned. The rate of interest is somewhat similar to the fixed deposit interest rate. Now let's look at the taxation. The interest that you earn from the recurring deposit is added to your income and is taxed as per your income slab. Next option for short-term investment is post office time deposit. Post office also offers varying tenures 1 year, 2 year and 3 year. Liquidity. Once you deposit in the post office time deposit, you cannot withdraw the money before you complete 6 months. If you want to close the time deposit after 6 months but before 1 year, you will get an interest rate of savings account. The interest will be paid annually. Now let's look at the returns. For the quarter ending September 30, 2023, the 1 year post office time deposit gives 6.9%. Please note that the interest rate for post office time deposits changes every quarter. Taxation. The interest that you earn is added to your income and is taxed as per your income slab. Next option for short term investment is company FD. These type of FDs is unsecured deposits, so comes with high risk compared to bank FDs. Manufacturing companies and non-banking finance companies, that is NBFCs, issue these kind of deposits. But it's only NBFCs that offer short-term tenures. Before you invest in any NBFCs, please check their ratings such as CRISIL rating, CARE, ICRA ratings. The rating should be very high. Go with the FDs that have AAA or at least A++ ratings. Compared to the fixed deposits, company FDs offer higher interest rate of up to 8%. Liquidity. These companies allow premature exit, but it's up to the company's decision. The penalty also depends on the tenure of the deposit. Let's look at the returns. ICICI Home Finance offers an interest rate of 7% and this is for 1 year company deposit. And another company, that is Manipal Housing Finance Syndicate, it offers 8.25% for the same tenure 1 year. There are many other NBFCs available. Please do your part of research and then invest in company FDs. Taxation. The interest that you earned is added to your income and is taxed as per your income slab. For company FDs, tax is to be deducted at 10% from the amount of interest. We have seen 5 short-term investment options. Let us summarize it. The first one is fixed deposit. Fixed deposits offers a decent interest rate. FDs with the banks are safest option. Next is debt funds. Debt funds offer higher return than bank FDs. However, the risk is high compared to the bank FDs. Whereas company FDs offer higher interest rate than bank FDs, but they are also unsecure. You have to check the ratings before you invest in company FDs. Next is recurring deposit. Recurring deposits are similar to fixed deposits. The interest rates is decent, and if you do RD in banks, it is also the safest investment option. Lastly, post office time deposit scheme. This is also a good option with a decent return and high safety. For more similar videos, please subscribe to your scheme. If you feel this information was helpful, then please hit the like button. It means a lot. Thank you. Have a good day. Bye-bye.